All right, we are live here. Our new session is just starting. How's everybody doing? If you already joined, thank you for joining us. My name is Mike Patel from Home Service Central YouTube channel, addressing issues and concerns for homeowners and home sellers. So welcome to my channel. We have an interesting and something new lined up today. And I'm going to say love is in the air. Oh, I'm sorry. Whoops. I'm going to say love is not in the air. Recession is in the air. And when I say recession is in the air, the media has picked up this topic and they're talking about it. And I'm going to go through some of those topics with you, or articles about recession. Is there a recession coming? We don't know. And if it's coming, what will be the impact to you, a home seller or homeowner? And for that matter, even if you're a home investor again, or a home buyer again, if you have to sell and buy again. So with me to discuss this important topic, we have several things we're going to cover. The recession, if it's here or not, or if it's coming, or when it's coming, and what's the impact. That's the main thing we're going to talk about. To talk about it, I have a special guest who is been on my channel several times. It is Paul Sian from Cincinnati area. And let me introduce to him. Welcome, Paul. How are you?
Good. How you doing, Mike?
Good. Can you just tell us about who you are? I know you're an attorney. You're a realtor. You also do lender. Just tell us about yourself.
Yeah, no, I'm just an attorney. I'm a real estate attorney here, Cincinnati area, licensed as an attorney in Ohio and Michigan. I just practice in the Ohio area, and then I'm a real estate license in both Ohio and Kentucky. So where I live is just literally the border. Ohio and Kentucky is five minutes away. So it made sense for me to get my Kentucky license, and I do work with a lot of home buyers and investors on both sides of the river.
Okay, on both sides of the spectrum. Yeah, that's cool. Yeah. What's going on with the market there in general for your local area? As we know, market is local, hyper local. What's happening in California, where I'm at, may be different. So what's happening in your neighborhood there?
Inventory is still a little low compared to what we had in the past. It's starting to pick up though with the weather warming up. So I'm starting to see more listings. Some of my buyers are a little more active too, but they're not as eager as they were in the past when the rates were lower. So they're looking at things a little more closely, scrutinizing the price and scrutinizing the features and the condition of the home before really pulling the trigger and making an offer.
Right. Okay, cool. Okay. So today's point, one of the things I want to start out with is, will a recession crash home prices? Number one, that's going to be the topic, or at least talk about it. And what sellers need to do, whether you're thinking about selling now or 2 years from now or 3 years from now. If a recession hits, and hopefully it doesn't, what can you do? And then there's a lot of noise out there. And of course, we're talking about recession too, so some may consider it noise, but so be it. It's out there. We need to address it. We need to start thinking about it. So there is a lot of noise out there. Let's make sense of it together so you can make smart moves with your real estate decisions. So to start off with, Paul, are you hearing a shift in tone from your clients about the market lately? Or we have our opinions, but what are your buyers and sellers saying about shift in market, if there is?
Some of the investors that I work with, they keep a little more close eye on those metrics, especially because that can impact their, especially they want to buy a property and then they're looking at rents. So if they're worried about a recession, and usually during a recession, rents go down, and that can cause issue with their pricing, with their cash flow. So with investment properties, they're mainly buying for cash flow. In our areas, we're not buying for appreciation. Appreciation, I tell everybody here, is it's a bonus if you get it, but otherwise you want a good cash flow that covers all your payments. So where, if you do go into a recession where possible your rents can go down and you're not able to get that, that could put a tough squeeze on your investment property. And the last thing anybody wants to do is be foreclosed upon or be a forced seller, where they have to kind of sell and be quick about it too, just in order to get out from under a heavy debt load.
Right. Okay. So now when your rents drop or they go up, are they the same as your home prices? So let's say your home prices went up 3% last year, just throwing a number out there. Does your rents go up 3% as well? And vice versa, is it the same, or is there a difference?
I think it'll depend on Cincinnati has a lot of individual markets in here. So, the location. So same thing here. There's the high demand, the A, B neighborhoods. Their pricing might, if they see some resistance in the rental rates, then they might start offering some discounts. Sometimes they'll offer like, hey, a month free. They don't
Right.
necessarily discount the rent, but hey, you're getting a month free, and that's built into the price. Or some buildings will throw in free heat because of the type of the heating system they are. That usually they're providing that anyways. But it's
Right.
they offer different benefits as well too, in order to not try and reduce the rent, because sometimes when they reduce the rents, depending on the type of loans they have, some of those loans are a little more uh, require the amount of rent that you're getting to cover
Hmm.
your debt. So when
Right.
it doesn't cover it, if your rents are down, that can cause some problems for the owners. And so rather than outright cutting rent, discounting rent, they'll offer some different incentives to kind of keep the tenants in place.
Right, right. Okay. So, but in general, when the home prices go up, rents do go up, and when home prices come down, they usually go down. But we don't know what's going to happen this time, right? Because things are different.
Yeah, I
So,
mean, I've heard some of the terms being thrown around, stagflation. You might have heard in the past too. It's where
uh-huh.
you got inflation, but the economy's stagnant. So when you got
Right.
that pressure, you got inflation pressure. Then there's going to be pressure inflating on housing as well as rents.
Right.
Same time too, people can't afford that. It kind of becomes a catch-22
Exactly.
situation.
Yep. Absolutely. Yeah. So let me share a screen because, by the way, we are not economists. We're not talking about the recession. We're not predicting a recession or whatever. We're just talking about the impact, if there's a recession, impact on housing to the sellers, homeowners, investors, and possibly even buyers, because a lot of home sellers become buyers. So I'm going to share a screen quickly. Um, and this is a screen from Fortune magazine. It came out on March 19th. So very recent article from Fortune magazine. It says that the markets get respite from Trump's session. I'm sure you've heard that term. It's been out there. This is the next third time I'm listening to this or coming across the Trump recession. So let me start again. Markets get respite from Trump's session fears as Federal Reserve keeps two interest rate cuts on the table. Now, this is as of last a few days. Um, Fed Chair Jerome Powell repeated the word uncertainty at least 10 times when talking about the central bank's economic outlook. The Fed slightly lowered its growth projection and raised its forecast for inflation, but investors appeared more convinced the Fed is particularly attuned to concerns about growth. I'll read the next paragraph as well. Markets breathed a sigh of relief on Wednesday after the Federal Reserve kept rates steady as expected, but signaled that two cuts remain on the table this year. Stocks jumped after Fed Chair Jerome Powell said the economy remains strong, though he emphasized the central bank will adopt a wait and see approach when it comes to the economic agenda of President Donald Trump. So, is this anything surprising, or is this been, have you heard of the Trump session and recession coming in, Paul?
I've not heard it quite referred to as a Trump session. That's an interesting take on it, but I do know a couple, I think twice within the past couple, maybe a week or so, Trump has been or not telling, but suggesting the Federal Reserve cut interest rates. So he seems to be, I don't know if he's front running them in order to say, hey, we need to cut rates now. I know there's talk of tariffs too that could have impact on pricing and on the economy. So maybe there's concern with that as well too. And we've seen through the stock market action when the tariffs get talked about more seriously, then the stock market has a tendency to go down. Then as they walk back some of those tariffs, then like today, I think the market was up almost 600 points on the Dow.
Right. Yeah, everything's up. Still below though, right? Still below the first. So
Yeah, still.
yeah, yeah. So yeah, the Trump session, I read another report yesterday. I do a lot of reports because we come on live and we do videos, and we have to keep our buyers and sellers informed from what we know if they ask us. So Trump session is the first time that any recession has been named after a past president or current president. Just something to throw out there. And like I said, this discussion, number one, we're not economists, so we're not gonna pretend we are. We are not. At the same time, this is not a political discussion as well, whether you red or blue or purple. We're just taking what we know or what we think we know and putting it out there. So that's what we're trying to do. I want to read another paragraph here. For the Fed, as you know, it says there's an uncertainty out there, right? So let me go to the next paragraph. For the Fed, uncertainty was the word of the day, said Chris Diaz, a partner and co-head of the global taxable fixed income team at Baltimore-based investment from Brown Advisory, who noted Powell used the term at least 10 times. So when Feds think uncertainty, and on one hand we have Trump, and I'm talking about Trump administration, nothing political here. One of his campaign promises is that he's going to drop the interest rate down. That has been one of his go-to promotion or political promotion or whatever. But the thing is, the president of the White House does not control federal rate, right? It has to do with the Federal Reserve Board, and Powell is in control and in charge. Is there pressure being put on there to change the rate? And if an interest rate is not, quote, natural, what could be the implications? I don't know, right? I mean, you can't push some things. You got to go with as they go. You can't push and shove interest rates or inflation economy. Seems like if that happens, there could be backfires, like what's happening with tariffs. So we'll talk about tariffs in a bit also. It's backfiring right now. It has already.
Yeah, with the interest rates, it's a tricky situation. The Federal Reserve has a lot of educated employees there. They're doing all the research, looking at all the economic indicators, trying to put that interest rate at a place where they think it's, works best for the economy. So that's not, inflation's not running out of control. And at the same time, too, we're not going in the opposite direction. We're not getting huge deflation, really, a depression of some sort that totally destroys everybody. So they've got a fine balancing act to work on, and it's not something I envy. It's better them than me.
Exactly. Right. Yeah. Let me read one more paragraph from this article. It says that the Treasury bonds, right there, Treasury bonds also rallied slightly despite the Fed confirming it would not lower the federal funds rate. That's what we were talking about. Currently sitting between 4.25 and 4.5%, which banks charge when lending to their peers overnight. The market is pricing in 2 to 3 cuts in 2025, according to the CME Group's FedWatch tool. If they do come to pass, however, investors will hope they're good news cuts enabled by using inflation concerns and not an emergency response to the so-called Trump session. It's like we were saying, you can't push things. You got to let it go as they are. Of course, you can control them, but you can't really push them, right?
Yeah.
So let's see where that goes. I'm going to go back to, you mentioned stagflation, right? So I'm going to go back to that and kind of read up on that. So I'm going to just to remove this. Okay, present. Okay, hold on, stop screen. I'm going to put another screen. Just give me 1 minute here.
Sure.
Since you mentioned it and I happen to have that article, so let me go here. Okay, so what is stagflation? What causes it, and why is it bad? This is from an article, June 15, 2024. So it's a little bit dated, but we're talking about the definition of stagflation. So it says here, and this is from Investopedia article, so it's not our article. It says here that stagflation is an economic cycle characterized by slow growth and a high unemployment rate accompanied by inflation. Economic policymakers find this combination particularly difficult to handle, as attempting to correct one of the factors can exacerbate another. Once thought by economists to be impossible, stagflation has occurred repeatedly in the developed world since 1970s oil crisis. In mid-2022, many were saying that the United States had not entered a period of stagflation, but might soon experience one, at least for the short period. In June 2022, Forbes magazine argued that a period of stagflation was likely because economic policymakers would tackle unemployment first, leaving inflation to be dealt with later. So what it's boiling down to is that you have unemployment, you have inflation, and you have a slowing economy. They have to go hand in hand. You can't push one to control the other. They have to, I mean, I don't know much about it, but that's, I'm thinking out loud if I'm a homeowner or a typical homeowner or home buyer. What's your thought on those?
Yeah, I mean, I can kind of see the balancing act becomes pretty difficult there. I mean, when you got unemployment is up, yeah, you definitely want people to get hired and start working again. Same time too, that also drives further inflation because then more money's coming into their pocket. They're putting that money in the economy. So it becomes again, to use that term, catch-22. You want to you don't want inflation to get out of hand, because then that also hurts people who are working, at today's dollar, and suddenly they can't afford what they used to afford. They're
Right.
falling behind. Their taxes go up, like we've seen in the past year here, and in your state especially, and insurance rates are going up, taxes are going up, and homeowners who bought at the peak, and they maxed out their budget, are probably feeling pretty painful right now.
Hmm. Yeah, everything's going up. So I don't know if are we still in inflation, or excuse me, if the rates drop, doesn't the inflation goes down? Are they kind of really connected? Inflation goes up, the rates go up, the rates come down, the inflation goes, kind of go hand in hand.
Yeah, I mean, when the inflation is high, then they increase rates to basically slow down the money, slow down the spending, slow down credit. And then when inflation is low, then they try to reduce the rates just to increase the flow of money and increase the flow of credit, so that gets the economy kicking up again. So they try to maintain a balance of what they say 2% inflation rate. But
Right.
it's managing that is pretty tricky, as we've seen in the past couple of years.
Yeah, because you have one thing, we're trying to control the federal interest rate, which controls kind of generally, it doesn't control, but that's where the mortgage rates go. I mean, they kind of follow them, right? Up or down, generally speaking. Now you have unemployment. So what has to do with unemployment? Is there more unemployment out there? And with all these layoffs coming up, with federal layoffs and US layoff and veterans layoff, which is artificial unemployment, right? It's not like, hey, companies slowed down, GE slowed down, or Tesla slowed down, they fired 1,000 people. This is like, okay, you guys are out of here. It's not natural process. So it's artificial, right? I mean, so
Yeah.
it's totally artificial. We don't know where it's going to go, because this has never been done before.
Yeah, it's challenging time, and I think as it works its way through, not only are they're wanting to reduce the federal headcount, employee headcount, but then that's also going to impact the contractors as well too. So there's a lot of contracting work done on behalf of the government, and I know they've been talking about cutting that back as well too. So that flows through the economy.
Yeah. I just want to make a note. If you're watching live, or if you're watching a recording, let us know what's happening in your neighborhood. Are prices going up? Are they coming down? Is it taking longer to sell? And do you think that the recession or stagflation will affect home prices to you particular, or how it may affect? We're trying to find out. So make some comments. We'll be glad to share with you and answer if we can, whether you're live or not. If it's not live, we'll do it later. So we're here to have a great discussion, So moving on, a couple of things I want to talk about is, it says here the recession talk is rising due to inflation staying above the Fed's 2% target, slow GDP, which is what, the gross domestic products, GDP growth, and growing layoffs. Stagflation is being mentioned more. Stagflation is being mentioned more, a combo of high inflation, slow growth, and high unemployment. The Fed has kept rates high to fight inflation, which is affecting affordability across the board. So now we got three things working hand in hand, and going back, you can't artificially do one of those, right? So that's why it's going to be hard to predict whether we're going to have a recession or not. And I'm just thinking out loud. I don't know. If you're a viewer there and if you know anything about it, let us know. We're just going to see what the impact is, because this has never been done. Unemployment is being forced for whatever reason. Interest rates are trying to get forced to be cut for whatever reason. And, that means you creating something artificial. And the problem with that is, yes, it may take care of your current situation, whatever the goal is for the administration, but what will happen 2 years down the road or 10 years down the road? Because remember, anything that happens now affects what's going to happen 10 years down the road. Correct? So we have to be mindful of what's going to happen and what's not going to happen. When you try to push and shove a lot of things, it can have a big impact down the road, which is unpredictable.
Yeah, definitely. It was the ripple effect.
Effects. And we don't know how big the ripple is. It could get ugly, or, it could solve things. I mean, if it solves everything, whatever the Trump's administration plan is to get the housing market going, make it more affordable, get everybody refund checks, get the inflation under control, hey, that's all good and done. But I got white hair. That's not how politics work.
Yeah.
Right? There's no smooth sailing nowhere.
No.
In real estate, as you know, we deal with home buyers and home sellers. Every freaking escrow sorry to say that, has an issue. There's nothing smooth. 99.9% of escrows have issues. That's where we come in. We try to solve the thing, right? Last minute, some buyers may have an issue. Last minute childcare pops up and don't get a loan. Or in Florida, association is going up sky high and they're ready to close and they get a notice, oh, HOA is going to jump from 300 to 650. Now, all of a sudden, the buyer cannot buy because that throws him off from DTI, debt to income ratio. So anything can happen, but we have to solve that, And right now, we're trying to make sense that if we get into a recession or a stagflation, or if we have high inflation, how is it going to affect you, the home seller or the homeowner? In the long term, if you're thinking about selling, or if you have an adjustable rate, what if the rates go up? What if the property tax goes out? If you're in certain areas like Florida, what if your HOAs go up, right? Or you get fired. I hope you're not a federal employee or a vet. A lot of them have been fired. And if you have a loan right now, you got an issue because how are you going to make the payment?
Yeah.
So it's something to discuss, So let's talk about something, Paul. Will the home prices crash? I mean, that's the question. Right?
I'm doubtful of that, considering how many people have. I saw the statistic recently. I think out of 5 homeowners, 2, if I remember it correctly, 2 have no mortgage on it, and then the other 3 have a mortgage on it. So that's
right.
2 out of 5 people with no mortgage. There's no reason, even if they stop, being able to afford their insurance or their taxes, which I doubt, that they could probably sell easily. That's another factor, is that the home equity these days compared to 2007, 2008, everybody has home equity. The home prices have gone up quite a bit in the past couple of years, so everybody pretty much has equity. Maybe it's the recent few buyers who bought maybe last year at the top with high interest rates. They might be a little bit squeezed, but even if they, if they're desperate and they need to sell, to downsize their payment, they probably could do it and not lose a whole lot of money.
Right. And here's a good thing, and that's exactly right. What you mentioned about equity and rates. So it says here that unlike 2008, most homeowners today, in 2008, people have 0 or negative equity. I mean, the house was at 700, and lenders were giving you money for $800,000. So when they pull out cash, they owed more than what the house was worth. At the same time, home prices were going down. So here you just pull out $800,000. You went on a vacation, bought a boat, spend all the money, remodel a house, and then all of a sudden, your home price went to 550, 600, and that created that. But this time around, as you mentioned earlier, locked in low fixed rate mortgages, a lot of them are low and they're locked in, so they're not adjustable. Back in 2008, everybody was taking toxic loans, 1% loan for the first year, 2% for the third year, and then 10% the third year. We didn't know what the heck was going on. And if you had a driver's license, they give you a loan. That's a joke, by the way, but that was true, right?
Yep.
If you had a social security card, a one-pay stub, and driver's license, lenders gave you a loan. Sorry to say that, but there were bad lenders out there.
You heard of the Ninja loan? Ninja, no income. I forget what it stands for, but it's like no income, no documentation.
Job. No income, no job.
Yeah.
Or something.
Yeah, exactly. Yeah, no income, no job.
Yeah. Okay. The other thing, like you mentioned earlier, right now, why it is different is because there's significant home equity. Not just home equity, we're talking significant. Anybody who bought the house, and I'm guessing this nationwide, of course it varies. In the last 10 years, if you bought it 10 years ago for $250,000, your house is worth $500,000. Maybe even more. I mean, in California, home price doubled significantly.
Yeah.
Significantly, certain areas. I mean, you're talking, my house, of course, I'm going back. Since 1996, my house has quadrupled.
Wow.
And I bet you it doubled in just the last 10 years. Literally doubled almost in last 10 years,
Yeah.
And the other big factor is, unlike in 2008, anybody who got a loan after 2012, 2013, 2014, because the lenders were shaken up and they lost so much money, they only give paper loans until 2012 to 2020. You had to have a very good credit, very strong paperwork, very strong employment for you to get a loan. It relaxed a little bit in 2021, 22, 23, 24, 25. But if you did not have paper, you did not get a loan. So anybody who got a loan are stable people, stable buyers. They're not going to hopefully lose a job. They might. I'm sure some have already done with the administration laying off feds and veterans and all that. But overall, the numbers look good. So I don't think there's going to be a crash, because what creates a crash? Let's go to the basics. Number one, a crash is created when there is an oversupply of homes. Number one reason. Right now, we have undersupply of homes. I don't know about you, Cincinnati, there, but I have two escrows, and on both escrows, there were multiple offers. We had to fight it, right? And there is still some multiple offers going on under 1.2, 1.5. Our medium price in Orange County is about 1.2. So that's a bread and butter home. So there is a lot of that going on. What's happening in your area? Is the inventory low or high, or what's going on there?
Yeah, inventory is low, and we still have pockets where there are multiple offers. And there are other areas, though, where, homes sit on for, 20, 30 days without an offer. And then I have been seeing some price reductions. So a couple of buyers that I've taken through some of the hot homes, the newer build, a lot of new features, updated, clean, presents well. Those I see, they go pretty well. If it's got a little bit of a dating, or, needs a little bit of, like they say, TLC, then those have a tendency to sit a little while, unless the seller is starting to adjust their price to account for that.
Okay. So talking about the talking points about will home prices crash, further along, if you read what I came up with from articles, obviously, a price crash would require a massive surge in foreclosures, which is not likely right now because of equity, number one, and there's still good employment, inflation is good, rates are not terrible. Instead, we may see regional price softening or stagnation in high supply areas. So instead of, like it says, a price crash is not going to happen because a lot of equity, there's a shortage of supply. But let's talk about Florida. And I hate to talk about Florida all the time, but to me, Florida is in trouble right now. There's a lot of inventory, a lot of high property taxes, a lot of high HOAs. I mean, when I say high, they jacked up pretty high from the last 2-3 years ago.
Insurance as well, due to all the hurricanes.
Insurance, HOA, reassessment fees, repair cost, labor, mass deportation. So there's a shortage of labor, and there's already areas in Florida where people have left or been deported, and there's a shortage. There's some companies out there, construction companies, sitting there. I've seen home projects sitting there doing nothing because there's no employees, documented or undocumented workers. There's a shortage, so.
Yeah, especially when the hurricanes come through. I've got a friend who lives down there, and his house was hit during the hurricane 2-3 years ago. So nothing huge damage, but he did have like a pool cover that ended up flipping over and then piercing his roof in a couple places. So he was saying it took at least 6 months before somebody could come out and fix it. He was at least a handy little himself and comfortable getting up on the roof, so he was able to tarp it just to keep it interim dry. But he was saying for 6 months, they basically kind of had to, anytime it rained, they had to go check and make sure the tarp was still secured properly, because otherwise they'd start getting leaks into the house.
Right. Now, was it because 6 months wait because of insurance claims, or was it because of not finding labor or materials?
No, yeah, just all the quality contractors were all booked up, and then just the people who are ready to work then and there were basically committing fraud.
Right, and they're going to charge you. I mean, I read an article about a Florida lady. She called a contractor. First of all, she had to wait, like you said, a month. The contractor came, charged her $70,000 for roofing, and he got away with it. $73,000. Come on.
Yeah,
you're not a custom home that's 10,000 square feet. This was your typical 2,000 square feet home. She paid up $73,000.
Wow.
Yeah, she got jabbed. And I think these are shady contractors or handyman or roofers taking advantage of. And she was single, by the way, single, elderly. So she was, quote, abused financially. So,
it's unfortunate.
Right. So, So one of the things I want to mention is for the viewers out there, let us know what's happening in your area. Do you see this year? And of course, this is your information. And the reason we want to know is what's happening in Texas or Montana or Utah. If you're watching anywhere, let us know. Do you feel in your area, based on some data, prices are going to go up or go down, or is inventory going up or inventory going down? Because that determines if there's going to be foreclosures or not. And that determines if there's a crash or not. The recession is about foreclosures, not having an employment, not being able to afford homes, or not being able to pay. you lose a job or whatever, then that creates a large inventory. And once you have a large inventory, that, so it's kind of chain reaction. It's so let's talk about the local and national real estate market story.
With that, I'm going to have to check out. I've got another meeting I've got to attend.
Okay.
But
Yeah.
thanks for having me on.
Oh, yeah, I know you said you were going to be here for half an hour. Well, I appreciate you being here. By the way, if you're in the Cincinnati area, Paul is available to answer any questions, or if you need a realtor to kind of take you through what you should do or not do, his name and email address is in the description of this video. So please look it up. And thanks, Paul. Appreciate it.
Yeah, thanks again for having
I'll
me.
continue with this a little bit, and we'll go from there. We'll make it short today.
Sounds good.
Thanks,
Enjoy
Paul.
the rest of your night. Thanks.
Yep.
Bye.
Okay, so we'll continue with this. Like I said, if you have any questions or comments, let us know. So I was talking about the local and national markets. Of course, real estate is always hyper local. Even though I'm in Orange County and I'm in Anaheim Hills, the housing market in Santa Ana, which is 10 miles away, or in Fullerton, which is 7 miles away, or Corona, which is in Inland Empire, which is 20 minutes away from here, no traffic, there could be a big difference in pricing and activity. So real estate is always local, but what's happening right now is the national headlines. And like I said, the reason I brought this topic out, recession, is because it's hitting the national headlines. It's hitting the media. Recession is in the air. And that's why I picked this topic, because people are talking about it more often than normal. So it is popping up. There is fear of recession. There is fear of stagflation. There is fear of rates going down, or they may stay up. And there is fear of people not being able to afford homes or anything else, cars, eggs, labor. So there's a lot of uncertainty out there. And I'm trying not to be negative, but I'm just telling you what I read and what I talk to other realtors. I talk to a lot of buyers and sellers on a daily basis, at least few a day. So I kind of read what they're thinking about it. But there is some nervousness out there. So let's see what happens. National headlines don't tell your neighbor's story. That means what's happening in your neighborhood doesn't mean that's going to happen what's happening nationwide. Nation may be slowing down, but like I said, Anaheim Hills market is very strong. If there's a house that comes on the market, it's priced right, it's moving condition, it's staged right, it's cleaned up, it's going to sell within 10, 15 days. So the days on market has gone up compared to the last couple of years, but they're still way below the 90 to 120 day norms. So just that tells me that in Orange County, the market is very strong. Now, that may not be true in Texas. I'm hearing that in Texas, Tyler, Texas, Houston, Frisco, other states, other cities, there's still a lot of construction going on. In fact, I'm hearing, and I could be wrong, there's oversupply of newer homes, and there's oversupply of inventory because of that. So home builders are giving a lot of incentives. So that may be a good place to go, because prices kind of stagnating there. And depending on certain cities and certain towns, you could get deals out there. So there is a ripple effect going on with, and that's why I'm saying that check out your market locally. And if you need a realtor to talk to see what's going to happen in the next few months or next year, talk to a realtor, direct message me or make a comment. I'll refer you to a realtor who's familiar with your area, and will give you some insights so you can make a decision if you want to stay or sell and buy or whatever. So we we'll be glad to help you in the guidelines. So what does the factor? So let's talk about why it's important if hyperlocal markets are different than national market. Well, it has to do with what's happening with jobs in a certain state, right? What's happening with employment in that certain states that I just mentioned that. So it not only employment, is there job growth going on or not? In Texas, there might be job growth, and in California, they may not be. So it's two different markets. And these little things affect the purchase of homes or the price of homes or how long it takes, or if somebody not being able to pay. I am listening, or I'm supposed to be on a Zoom in 2 days, and they're going to talk about that there is a surge of foreclosed homes out there. Yes, that is true. A lot of homes compared to 1 or 2 years ago, there's a big surge in foreclosure activity. All the people, or a lot of people who bought in the last 2-3 years, they paid the high price. They paid the 7%, 7.25% or 7.5%, especially the FHA loan. A lot of them have defaulted. So yes, we are seeing a high number of foreclosures compared to last 2 or 3 years. But when you compare that to 2008 or any other foreclosure uh, um, era, they're still small. Yes, they're bigger. They were like this, they're like this, but they're not like that. So hope that makes sense. So I don't think foreclosure is coming anytime soon until we have equity that goes down, which happens by home prices coming down, until we have a big unemployment where people lose jobs and can't afford to make the payments. I don't think we're going to see the next year or 2 years. That's my opinion, at least in Orange County. I don't know in your state or local area. It could be more, it could be less. So if you can let me know what's one local trend you're seeing that completely contradicts national news. You have a massive layoffs in your area? Are you seeing home prices jump or drop compared to national numbers? If you can share those, that'll be great. Just let us know and we'll go from there. So what I want to touch on is, if you are thinking about selling, or if you want to consider selling, whether it's next month or next year or 2 years from now, what are some of the things you may want to consider doing, or how can you prep as a homeowner or a home seller? So want to talk about that. The first thing is, half the news is fake, half the news is wrong, and half the news is fear-based. So the first thing is, be confident and don't panic. There is no foreclosure imminent right now, according to me. Could be wrong, but foreclosures, there's a shortage of inventory in general nationwide. So I don't see that happening. There's a lot of equity. The loans were very strong. So these people who bought homes are solid people, solid buyers. So if you're thinking of selling in the next 6 to 12 months, use this time to organize your documents. If you're going to buy, you can start preparing to get your documents ready, because if you sell, you're probably going to end up by moving up or moving down, or you may end up renting. Then you don't have to worry about those documents. That's one thing you can do. If you have bad credit, maybe you were late in a payment, or you had medical issues, or something happened and you goofed up on your FICO score. Maybe it's 620, maybe it's 720. How can you make it 760 or 780? Because the better your FICO score, the better rate you get. Yes, the better rate you get, and better terms and condition. Because when the banks give you a loan, they're taking a risk, and the better you are as far as risk, how risky are you, the better FICO score, which is an indicator of your past payments, the better rates and terms you get. If you're thinking about selling, the other thing you should do is start preparing your home to make it look cool, in the sense, buyers today buy homes that are ready, they're priced right, they're moving condition, they look good online, because the first thing people do is they go online to look at homes. They're not going to call a realtor and say, hey, I'm going to start looking. By the time they call us, we know they've been to Zillow or Redfin or Realtor.com or personal website. We know that. They've been there. They've seen the houses. Then they call us, hey, I want to look for a house, this area. And we know they already know, they've done their homework. That's just the way it is today, because it's online. So pictures are very important. If they don't like if I'm scrolling through on my cell phone, which is small pictures, and if I don't like the carpet, or if I see some stains, even through the pictures, or there's too much clutter, etc., the buyers are going to move on, even though that may be a great house. And even though you may just need 2 hours worth of cleaning or decluttering, they may pass on it. So I suggest you start talking to a realtor, budget your staging budget. That's right. And then prepare for your cost. If you've been there a long time and if you have not done much, is your paint neutral? I have dark paint. Or do you have one room is green and one room is purple, or one room is yellow, all that? Maybe you want to think about neutralizing, because one of the cheapest thing you can do, or one of the cheapest thing one can do to change the look of the house totally is paint. And that's a cheapest remodel you can do. So suggest make a budget for that. Do you have to paint the inside? Do you have to paint the outside? Do you have to do any gardening up front? How is your curb appeal? How is the front door? Are the knobs clean? Are the knobs very old? So start preparing for that. Have a budget. Are you going to spend 2,000, 3,000 to prep your home? Or maybe even in California, I mean, 2,000, you're probably going to not do a whole lot. Put one door in the front door. So start preparing for things. If there's not things working, your appliance is not working or your AC is not working, you may want to have that fixed slowly, or you may want to start doing repairs yourself if budget is an issue. And of course, whose budget is not an issue? Everybody is. So if you're willing to do that. And then finally, be prepared on which agent is going to help you sell your home. And the agent you want is a local agent who's familiar with your neighborhood, your city, what's happening, the trends, and who's going to bat for you. And like I said earlier, if you need that kind of agent, I'll refer you to an agent, talk to them. You can talk to another agents in your area and then make a decision on who you're going to use. But even if you are not going to be selling for a year, start talking to these agents. They'll give you ideas so you know what you're going to have to do. You know in your area what's going to happen. Are the prices going down in the long run based on the indicating factors, or the prices are going up in the long run? In Orange County, they're going up for sure. At least so far, they've gone up. And I expect at least April, May, June, very busy home selling season, prices to go up because there's a shortage of inventory. So start preparing, and then of course, you also want to talk to the lender, whether you're selling now or later. And the reason you want to talk to a lender, even though if it's a year away, is where you stand. I'm making $100,000. If I sell my house, I'm going to have $200,000. So I'm going to be putting $200,000 down, all of the equity, but I want a bigger house or a smaller house and save the money to put in your retirement account or whatever. So talk to a lender / accountant so you are very well prepared. I'm assuming if you're watching this, you 35, 40, 50, 60-year-old or older. So preparing now for your nest egg. When you're 70, do you want a payment done? Or do you want to refinance and just stay in the house and take a 15-year loan? If you have 7% for 30 years, maybe refinance for 4.5% for 15 years and pay off that house. By the time you're 45, 50, or 60, your house is paid off and you have no mortgage payment. Or on the other hand, you might have a very low payment like me. I have 3% interest rate fixed for 15 years. So I'm not paying anything extra, but I'm putting extra money in a IRA account or retirement account or a SEP account. So I'm preparing for my retirement. So either way, you have to start budgeting, and this is the time to do it. So these are important things. If you need some help, let me know. I'll refer you to an agent. The other issue you have to think about is what makes you move or not move. And one of the things that make people move is, what's your biggest fear about market this year? I know some buyers, good friends of mine, they have not bought since the last 3-4 years. They kept telling me, market's going to crash, I'll buy next year. That was in 2022. Market's going to crash, I'll buy next year. 23, prices went up. Market's going to crash, I'll buy in 24. They still haven't bought. And now the $800,000 house that they were going to buy is worth over $1 million. And guess what? They can't qualify for $1 million. So the house they're going to buy is the house they could have bought for $600,000, which is now worth $800,000. And the house that they wanted for $800,000 is now $1 million. So if you are thinking about pulling the trigger, whether you want to sell this house and then buy another one, are you also saying, hey, you know what? Let me wait because the prices are going up and up and up. But if you do that, remember, when you buy, you're going to pay a higher house. Rates may be 6%, maybe 5%, could be back to 7.5%. So are you prepared for that? So that's something you want to think about. Are you consider selling or just holding off? The other option is, if you have a good rate like me, but I'm not planning on doing this, one of the things I considered doing but did not do it for my personal reasons is I have so much equity. I was thinking about pulling out $300,000, $400,000 out, then buy another house and rent this one because this is a larger house, and buy a smaller house, and I can get more rent on this house and my newer rent. So that was my plan, but I did not go for it. Instead, I remodeled because I wanted to stay here, etc. So these are the planning you have to do. Whether recession is coming or not, you have to look at your own situation. Don't look at Oh yeah, Texas is blowing up, Florida is blowing up, California is going up. What should I do? Look at your current situation. Look at your situation where you're going to move. Where are you going to be in 1 or 2 years? What if you lose your job and you really want to move to your mom's or your dad's, or you want to move with your kids and grandkids? If you are able to move right now because you have a stable job, um, then do that now. Don't wait. Don't quote get greedy to make 10, 20,000 extra. So these are tough decisions, but they need to be made correctly, um, etc. So hope this makes sense. I'm just trying to make sense that recession or not, you do what you got to do in the time that you want to do. Don't let the outside news medias, even me talking like this is a little bit negative today about recession, but I'm talking about a fact. But it is negative. So what happens is when you start listening to negative things, oh yeah, market's going to crash, oh employment's going to go up, rates are not going to drop, we're going to go into recession, all of a sudden, nah, I'm not going to move. All these years you've been waiting to move to your mom and dad's, or you want to move with your grandkids, or you want to move to Florida or Hawaii, and all of a sudden you can't move. You have a goal, go for it, but make that decision sound and faster than later and wishy-washy goals. So that's what I would suggest. Yeah. So boils down to what's your biggest fear about the market this year and next year. So you need to fight that. And then are you considering selling or holding? We talked about that. Are you consider selling and holding, or you can sell and buy another one, or pull your equity out and buy a rental? So a lot of things you can do. And the other question is, if the market slows down, would you buy in a slower market if the prices and the rates lined up? So let's say you have a house that's worth $400,000, and when you're ready in a year and a half, it's only worth 375 or 350. Are you still going to sell it because your equity just dropped? But you will buy, on the other hand, the house you were going to buy for 500 may have dropped to 450. So you're in the same situation. If your home price drop, chances are the home price that you buy will drop. At the same time, if you're waiting for your home price to jump up, there's a good chance the home you're going to buy is going to jump up. The key factor is, at the end of the day, it's a wash. The key factor is what will be the interest rate, 5%, 7%, maybe even 8%. Who knows where this economy is headed? We don't know. Absolutely, we don't know. So, so like I said, if you have any comments or if you have any questions, put them down here. If you're looking at this as a recording, I'll be glad to answer them after the recording. But my next session is going to be interesting as well. Please join me at 4:30 on Mondays, California time. And thanks for watching. Appreciate it.